Hey everyone, welcome to the weekly review. This week we actually got a recession scare. Fed didn't cut. We had unemployment data, unemployment go up, and jobs data look really bad. And finally a recession scare. Now let's look at where we are. I'll start with the positioning breadth. We went negative. We're at 48% negative, almost 49. Usually a good bottom is like 60. This one was 65 negative. This one was 68. And I think it's very easy to get to those numbers. We just need another red day like Friday. We have reasons to believe it will happen on Monday. This news was posted after hours yesterday, in which Nvidia says it's going to delay its next generation of AI chips by 3 months, which should make Nvidia go below 100, maybe even a bit lower. I think it will play out something like, regardless of Nvidia, like the market should go down another day or so. So on Monday, almost certainly. But then the turnaround Tuesday plan is still in action. Uh, and I think we have potential to do like a double. We go down on Monday, we gap down, we continue going down. On Tuesday, we gap down again, and the dip gets bought, and we have a reversal on Tuesday. That's kind of the best bet right now. And then we rally because that's kind of it. Uh, let's look also at some positioning numbers and whatnot. So this is Qs. We see that rank positioning rank percentile we're at about the same levels where we had previous bottoms. I think we can go even lower and take out 400. Ideally, we would get a close below 400. Nothing really has changed here in that regard. We're at 448, so around here. And still, I think 400 is going to be support, even though we can overshoot a bit, like maybe go 447 or something. It depends on how strong the momentum is. Volume-wise, nothing really happening. I mean, there are some 3-day puts that got some volume, but there's also some calls. Kind of inconclusive, and surprisingly, volume was lower than expected. So panic, but not really panic, and still not very bearish. That's kind of a good thing because the news from Nvidia will still catch people off guard, and we should still get like a panic moment on Monday, Tuesday, in which Qs drops a lot. How far are we from 440 now? Let's do it on daily. Only 1.5%. So yeah, I think this is not enough. We could potentially even go close this gap here, like 427. That's like 4%. Uh, if uh, if the reaction is pretty bad. So we lose the yearly AVWAP, we go below, maybe at the beginning of the gap, not necessarily above it, but this is quite possible. Uh, like filling the gap would be too much, even though it's still an even better buy. But something like this, 3% over 2 days, could. I still like to see the V reversal, like what we did with Nvidia. I think I called it out at some point, but it didn't really go the way I wanted to, and it was here. So what I wanted to see was something like go all the way here and close above the AVWAP. We kind of got it here. Went all the way here, and then we recaptured the AVWAP quickly. Now it's becoming resistance, which is bearish. But this is kind of what I would like to see for Qs. We go below the yearly AVWAP and then close above. This can happen like we can not close above necessarily, but because we can have one single close below it, but something like go here, then gap down again on Tuesday, and then during the day on Tuesday we close above and we recapture the yearly AVWAP and go up from there. And this is a good play regardless of what happens next, because we will be deeply oversold. We will be at positioning support, and if we get something like this, we go super oversold on 1 hour, super oversold on 4 hours, and so on. So this would be a good short-term play regardless of what happens next. Like maybe we go back all the way here. Maybe we even get rejected by the AV up again, but after doing like a poke above, something like this. Let's say we go here, we bounce, and we go here and get rejected here and go back below and go even lower. Like even if this were to happen, this would be like a 5% play, 4% play, 3% play. So less than I thought, but this is just a scenario. Like we can go all the way here, and even regardless of what happens, oops, regardless of what happens afterwards, meaning we could potentially go down again, we catch a 5% bounce, take profit on it, and don't care about anything else afterwards. So that's quite possible. Um, okay, now let's look at VIX a bit. Went up a lot, sign of panic. Maybe something broke on the market. We'll find out over the next couple of days. Maybe there were some margin calls on some bigger names uh, because it didn't really make sense for VIX to go up this much, considering that, yeah, I think Qs was down like 3 and a bit% at the lows, 3.3 and close to 2.3, but it was kind of stabilizing and VIX was at 60% up for the day. Quite strange that it went up that much in spite of not really getting that much fear. But this is fine. Historically, long wick upside candles are tops. Like for example here, even here we went above, but we tried to go up again, but eventually didn't close significantly above this weak level. And I mean this. So we closed briefly or at it, then tried to go again, got rejected, tried to go up again, got rejected. So we didn't have a close above that week. Um, what else? Like this one here as well, very similar situation. And I'm not saying we don't get another explosion in VIX. I quite expect that, but this this type of candle is usually a top, and we very rarely see it move above this level. I think there was a better one, like this one here, this one here, this one. So high wicked candles with candles at the top with large wicks are usually sign of a top. And I think we can even go to 30, like even go above a little, but it won't have a closing high above this candle most likely. And this is exactly what we want to see. Like I talked about how to spot the bottom, and that VIX and VVIX will make a lower high and the market makes a lower low. This divergence combination will be our signal to go long. Now let's go to SPY. How much lower can we go? So we close here. Well, 2%, again, seems about right. IWM should go to 200. Um, on the SPY positioning, 532. So we're about here. Crossing 530 would be big. Crossing 520 would be big, or even getting to 520. The biggest level for SPY is 500, but that's kind of irrelevant. It's way too far away, and I don't think we see it. Qs would go to super extremely oversold. Like if we get to 540 and we keep going down on or 440 on Qs, I think we could potentially see like a crash leg, but that's so unlikely because crash legs don't usually start like this. Not the timing for the crash window is not now. We're just crossed the month. Uh, there is no OPEX in sight. How a crash would happen would be something like we we continue going down. We have a bounce. and it would have to be tied to OPEX most likely. So we have OPEX is here. Oops, not that. This is OPEX. This is September OPEX. And it will be a situation similar to 2020, in which we started in February and we closed at quarterly in March, and it would have to be a situation similar to that, but not one from the top, one from weakness, and it would have to be something like this. So we go here. We have a relatively weak, like, let's say we fill the gap, like we show maximum weakness, and we actually go as low as filling the gap here on Qs, which would be another, how much down? Another 4% down. Let's say we go for maximum weakness, okay? And this is also an important level, a horizontal level. I'm gonna cut that one. Oh no, it's for 540, so it's fine to stay. And we go here for the full gap fill. Let's say we go here and we are relatively feeble. We do have a bounce, but 440 becomes resistance. Sorry, closer. Like we go here, we have a bounce. 440 as the biggest delta level becomes resistance for some reason. Like we go to super oversold all the way to here, around here. Then we go up, and the market says no. And at that point, we get rejected here. We we get to OPEX at around the lows, or it could be anywhere. Like it could be other highs as well. It doesn't matter that much. But let's do something like in between. We go here, and then from this deeply oversold level, we have another leg down. And if this leg down starts on OPEX, then we get a dead loop into September quarterly expiration, because I'll switch to the expiration by open interest. Which is it? This is August 920. So 920 is this bluish dark, slightly dark blue. And we go here, and instead of recovering and going back to 440 and taking it back in a bullish way and converting all the delta into puts, basically the all the puts that are here become all the calls are accepted as decaying, and they will start decaying and feeding the negative loop, and all the puts here become go towards getting fully hedged by market makers. And what will happen is we get a dead loop, and it will last until September OPEX, just like we had the one from February until March, and it lasted 1 month. The doom loop will continue, and we will have like a crash leg. So now is not the time for the crash leg. The timing is all wrong. But if we go all the way here, we show maximum weakness on Qs. Then we bounce, and again we show maximum weakness because we don't even take 440 back, something like this. And August OPEX finds us near the lows, and then at August OPEX, we make new lows relative to, let's say, 427. Then this is probably a doom loop. And we start a crash. We will probably start with something like a minus 5% day on Qs. If from this super low deprecated level we start another leg down, then all bets are off. We're probably crashing. But it's very, very unlikely. What I'm saying for now is that it's virtually impossible to start a crash leg now. So whatever happens, the lower we go, the higher we should bounce. And the amplitude of the bounce will tell us the likelihood of this. Like if we are to bounce, it's going to no. If we are not to crash and have another bull leg, the bounce has to be very strong and have a lot of amplitude. And I'll show 28 as a comparison. So this part here is what is considered to be the crash. Oops. And mega downtrend. We were down from the highs that happened in October 27. We were down already 23%. And we had a bounce which was what, 10%, 7, 10%. But we retested the low. We were already deeply oversold, and in spite of being deeply oversold, we still made a new low. And when this new low happened, all hell broke loose, and we got the crash. Crashes don't happen from tops. Crashes usually happen from bottoms. Which one is the crash? I think this one is considered to be the crash. Oh no, March happened. I have to look for cues. This one is considered to be the crash. This thing here. It closed 5, but it went like 36% in a single candle. And it closed down 5%. Holy fuck. The tech bubble was crazy. Anyway, getting back to our situation. Oh, one last analogy with this T20. So your typical correction, 15%. That's fine. Some are less, some are more. And then a 10% bounce. Basically, we are somewhere around here for the current leg, let's say, because we could get 15% on cues, I think, if we go all the way down. We still got this, and the crash happened. This wasn't the crash, this was just a correction. The crash is this part here. This part should not have happened. This is another 23%. And we could get something like this, but before we get something like this, we will get this part, 100%. Regardless of whether this happens or not. So we will be hunting for it. Let's say we go to 517 for the ghost print here, 518. We should be getting a 10% bounce from 518. No, not 10%. That's way too much. We have to go down lower. But 5% is doable. So back to the month-end quarter pivot. So something like this. We should be seeing this. And then if we go back here, we can do like the crash leg down if it happens. But again, I don't think it will. This is just a normal correction. We have no reason to crash unless some external event happens, like a bank failing or something like that. And if that happens, it will be all over the news. So don't assume it will happen, and just buy the dip for the inevitable bounce that will happen. Okay, another interesting fact I wanted to look at was oil. It's been building up quite the consolidation pattern or pennant here, and it's at the lows. Recession fear. I would not be surprised if this broke down at this location. and it will murder XLE. If we get this type, after this type of build up, I think the breakdown will be glorious. And target would be probably like this 45 area here. And not necessarily a crash leg, but sort of like this. It dropped. How long did it take to get from that high to the low? 40 bars. So that's 58 days. Um, it's like 2 months. Yeah, would not be would not be surprised if we get something like this. The minimum would be retest of this low area here, so 58. I don't recommend being long oil or energy. We also had uranium breaking down, and we had CCJ breaking the trend line. I think I'm on logarithmic. Yeah, my bad. We had losing this trend line. We lost the 200 MA as well at here, and we see what happened afterwards. Uh, and I still don't think it's a good dip buy yet. At 36, it's probably due a bounce, so I think it will bounce with the market, but it's just a mechanical bounce because the market bounces. It's not going to be a macro bounce. So I would expect this becomes resistance moving forward and might not be bullish again for a while. And let's looking at oil, it's below all moving averages. All moving averages are sloped downwards. We just got a rejection for a 200 MA. This looks really, really bleak. Let's see the weekly as well. Just lost the weekly 200 MA as well. Everything except the 200 pointing down. It's not looking good for oil. So I think 60 is almost guaranteed if we have a breakdown. Uh, of course, it could potentially do this one more time and just, but eventually, and considering the fact that the most likely outcome is a recession at the moment, this should break to the downside. Okay, let's look at mega caps a bit. Tesla is shit. Don't want to be anywhere near it. Um, yeah, fake breakouts lead to super spectacular breakdowns when they become fake. We just went below the trend line. Uh, Tesla is a shitty company, period. I mean, the cars are not that good and there's a lot of competition. So I would not be surprised if Tesla goes back all the way to the lows here, maybe even retesting 100. I mean, this is this area here is the only area where I would be interested in owning Tesla. Apple. Apple kind of saved the market yesterday. It was the only reason why we didn't have a worse breakdown. What I'm seeing now is basically this. So it appears like a break above this level. We had a couple of weeks. Now uh, we are consolidating above. We went above, but we could potentially do a bit more of this. But as soon as we go below this level, all hell should break loose for Apple as well. Nvidia, I don't know how negative the reaction from the news will be on Monday with the delay of the new generation chips, but I would assume it will lose this trend line. And again, depending on how severe the reaction is, I think this ghost print from May 7th that was left behind could come into play. Other than that, if this doesn't come into play, most likely it's going to be this 95 level, meaning a poke below 100. We fill the gap from earnings here, and then we go up, probably close on Tuesday back above 100. The more time it spends below 100, if it gets there, the more bearish it becomes. So let's say we get a poke and recover, that's fine, bullish. The lost trend line won't matter that much. Most likely we go back above to here like 125, 130. But if we go below and stay below, this is getting more dangerous. Just like with the AVU up here, from this low here, let's also put the other AVU ups. Where this one is from here, too far away, we don't care. Pick this one from earnings. No, this is where was the horizontal breakout. So this is the one we care about. This one, 90. This one is manageable, and also was support here. So what I was saying is that we poked below, we recovered, bullish, but we went back below it, and now it's becoming resistance, meaning we got rejected from it when we went back above, back up, and now we have a catalyst to be negative. If this was the only thing that happened, just this poke and recover, it would have been bullish. But because it was actually a rejection and now we're back below the AVU up, bias is bearish. And we should continue going down. Full target for the correction, although it's a lot of downside. Another 23%, that's way too much. I don't think it's doable. But this 95, like 10% down, again on Nvidia, is more than doable over 2 days. Even a single day. And I remind you that it's not about the close. Like I'm not saying we'll close like 10%. Uh, I think we can go super low, like even do like 15%, and then close like 10. Then another day go back again and something like this. So how low we go and how badly we close are not the same thing. It's more important how we close than how low we go, because we could even do this, and then if we close like this it's much better, or even if we close like this, if it goes minus 20% and then recovers half of it, it's a bullish setup, not a bearish one. Google, since it missed earnings and we got a negative earnings reaction, I think it's pretty clear that Google and Amazon now, I don't have Amazon here, no, Amazon are the first to topple from the mega caps. And I expect both Amazon and Google to underperform moving forward, uh, even if the market recovers a bit, because the damage is done, and the generals have to give out one by one. The last general to fall should be Nvidia because it's the king of the cycle. Uh, and I think Nvidia will recover, potentially even have great earnings. But it shouldn't be super strong before earnings. Maybe some pump happens again, I don't know. But Amazon, I'm pretty sure, won't recover. And it should respect the trend line here. Like it will go up with the market or down with the market as well, but it shouldn't do this. And the textbook example is Meta from 2021. They did something like this. It tried to poke above, but lost it and eventually had a breakdown and so on. This type of thing has to happen this time as well. And Amazon is a good candidate now. Microsoft kind of a good candidate now. They also have the negative reaction. We don't have yet a trend line for how it will play out, but just looking at it, it should be this. So something like maybe even lower. Second one would be kind of this. Either something like this. No, more. Yeah, this is probably like likely which one it will be, because it lines up with the candles here with the declining slope. So something like this, and eventually uh, get rejected. This There's a lot of way for this to play out. Meta had a positive catalyst, so Meta is going to be the last to fall. Also the election spending on ads kind of thing, even though it got rejected from earnings, it was because of the market. It's probably going to be a bullish one moving forward together with Nvidia. So my expectation now is Meta and Nvidia will be the last to fold. Meta also has a good AI model in Llama that they made open source, and or they made public. I don't know if open source. So they're doing fine in the AI wars as well. So I don't think it will fall back to earth anytime soon. Meta is going to be a winner this cycle. Netflix, on the other hand, probably has topped out. I'm not sure about it. It tried to break out here, got rejected. Still think we have a proper breakout of this pennant, uh, and it will go back at least to 676 or something like that. Maybe this, like this. So this would be the first target, 664, 65. Yeah, kind of like this. Then just go sideways for a while until it eventually either goes back to the highs or has a breakdown. Some has already topped out, most likely, with oil doing what oil is doing. I don't think it's plausible that some will go up a lot in spite of the good earnings it had on Friday. Doesn't mean it will fall immediately, more likely chop, maybe do a bounce here on this back test, but eventually this and break down as well from this Fibonacci. No, Fibonacci, sorry, week of distribution. Go all the way to 81, if not even lower. This looks like a, what's this called? It has a name. The lower one is a spring. The other one, I don't remember. Whatever. Doesn't matter that much, but most likely this for Foxhome. And again, didn't draw it exactly. Probably should do something like this and then have the breakdown like this. Okay, I think we've covered everything. I'll do a short summary, meaning we should continue down because of the Nvidia news. Target is 440, but could go as low as 427. I don't think we crash anytime soon. The only scenario in which we could crash is at August OPEX going into September OPEX if we enter a doom loop. And that scenario is we show maximum weakness, meaning going to all the way to 427 to fill this gap on Qs. Then we do a weak bounce that doesn't go that high, and then we go down again, going into OPEX or slightly after OPEX, and then we make new lows. If in this scenario we make new lows relative to the low that will happen next week, then we are fucked and we probably get a flash crash. But this is extremely, extremely unlikely. It's more likely that we go back up again. Uh, yeah, that's it for now. Have a good one. Bye bye.